Hello, good evening, everyone. Good day to today's important discussion. Today's topic is empowering financial crises and building generational wealth. I'm really excited for this one. We've got Dr. Sharon Owanyuze with us today, and she's all about helping young people flip the script when it comes to money, the mindset about money and building a legacy, in our communities, especially encouraging the youth because they are the future, to be completely honest. So this isn't your typical financial talk, she really makes it real, and I'm looking forward to just hearing how she sees it, especially when it comes to what's actually possible for our generation as youth. I will ask Sharon to briefly introduce yourself, help us understand how you got into this work and what you do, and what motivates you to focus on financial literacy and empowering youth like you to think about money matters and why it's important. Over to you.
Thank you, thank you. I'm very happy to be here. I see several people in the audience that I know, and this may be your first time, so please feel at home. This is a learning space. We are here to share what we've learned with you, with our community. So feel welcome. Like our wonderful host introduced me. My name is Dr. Sharon Onyuze. I am currently a teaching professor at Missouri S&T. I got into this financial literacy world. I got introduced to it through a very big community educator, Miss Immaculate Busindia, who is here with us. So if there's anything that I don't tackle, we have an even more experienced person here. But I'm very encouraged, and I have such fire and zeal to share it specifically with young adults, youth and young adults, because sometimes we tend to think like these are things for people who have families, for people who are older, but it's important for us to start early because even where they are now, they wish they had started early. So we are very fortunate to have mentors with us who are able to tell us and give us some great tips that we can learn for ourselves, put it into practice, and then share it with our friends and family.
Great, great. And I'm very excited and looking forward to um, just the discussion. And our topic, like I said, is empowering youth to tackle community financial crises. So, and building generational wealth. So let's start by understanding some of these challenges. What are the key financial challenges facing our communities today, especially from a youth perspective? Can you kind of give us an overview of this problem that we're looking to tackle?
Yeah, so I actually prepared a few slides that I would like to share to help answer that question. That's a very good question. It can be pretty broad, and I want to dive deeper into it, and then we can continue the discussion accordingly. And people in the audience, feel free to put any questions and comments in the chat, and we'll be sure to address them afterwards. So I'll go ahead and share a bit. All right, we good to go? You can see my screen.
Yes.
All right. So, like you all know, tonight, our topic is empowering youth, and tackling specifically community financial crises, so that we can build generational wealth, right? For it to be generational, it means we have to start now in our generation so that our children and children's children will be fortunate and happy because of the great financial choices we made today as youth. So when we talk about financial crisis, it's important to understand where they could be coming from, right? So some of the root causes are, first of all, lack of education, right? So lack of education, in this case, specifically financial education. So the fact that you're all here tonight is a great step towards, removing this problem of lack of financial literacy. And we are here actually. This platform puts on conversations like this every Thursday. So you're welcome each week to come so that we learn together. The second one is income inequality. So this is not very surprising. Some people just fortunately have able to make more income than others, but it really doesn't matter how much you make. It's how much you're able to save and like grow, right? So we are here again to learn that even as youth, who are not necessarily millionaires yet or whatever, we can use the little that we have and make sure that we put it somewhere where it can grow as fast as possible and as efficiently as possible. The other one is limited access to financial tools, right? So what is interesting actually is that financial tools are quite abundant, and many of them are free. So for example, this series that we put on, it's free for you. And there's a lot of financial tools that I know I've personally gained. And even just being in it for a few years, I can already see the benefits. So access is a big thing. Information is power, and the fact that we can have information available to us now that we can make informed decisions with is very key. So the other one is so now that's in regards to root causes. Now it's important to conclude this slide by saying these crises really impact us as youth. I'm focusing on youth today, but if you're in the audience and maybe you don't identify as youth, you're a parent, you're a grandparent, you can still take this information for yourself or even share it with any young adults that you know. So these crises do impact us, impact our job security, in fact, impact our family stress, whether if we have siblings or parents, or even ourselves. You can be an independent young adult who is able to make great financial choices so that you avoid stress and lost opportunities, right? So one of the things that we're going to be introducing today is some opportunities that you can take advantage of even right now, okay? So specifically, why are youth important in this financial transformation? Youth, we have a lot of energy and creativity, and we actually still have a long time, God willing, ahead of us. And with the right support, we can really be the solutions to our community. I do want to, I have become quite passionate because I have seen friends and classmates and colleagues who have faced sudden, unexpected either accidents or sicknesses that have been very devastating. As young adults, we don't think about being paralyzed or like unable to move or with such a chronic illness in your 20s, in your early 30s. But not like we don't know what can happen to us. We all, whenever we have a car, we have to have car insurance. You can't even go on the road without car insurance. We have to have health insurance. But we don't get to think about our lives and how we can protect that energy and creativity and vibrancy and health in general. So it's important that we keep that at the back of our minds as I go through these conversations. But we can also be entrepreneurs at a young age, right? Well, even though we are going through school, we are starting our first jobs, it's not a far-fetched idea that we can be entrepreneurs in a small or little sense, right? And we're going to talk about that as I proceed here. So how can we, first of all, start by educating ourselves, and why is it even important? Financial literacy is not just important, it's essential, meaning that it's necessary, because if we want to be not living paycheck to paycheck, where we can feel comfortable to even take a vacation, to even go a few months without working if you're in between jobs, we really need to be educated financially. And that's why, again, learning opportunities like this are very invaluable. And specifically under financial education, some of the things we need to learn about are like budgeting. So being sure to understand if you're a student and you're on a graduate student stipend, if you're a high school or college student and you're working a part-time job, or if you have financial aid, whatever source of income you have, you can have a very simple budget. How much is coming in? What are your required expenses? And most importantly, how much can you save just in case that stipend is late? Just in case you lose that part-time job, are you able to pay your rent for at least 3 months, right? So budgeting, we can't overemphasize it. And then credit, right? So some of the things that kill us starting from a young age is credit score, right? So we go to these stores all the time. They are telling us, "Oh, get a credit card for this store, then you can buy as many clothes as you want, as many shoes as you want." But we have to think about credit. It's important to use what you have and not borrow from your future self, right? If you need something urgently, it's okay to buy it on credit and immediately pay it back at the end of the month so that you don't mess up your credit score at a young age, because it's hard to build it up. And it is true that having a credit card is one of the biggest ways to build your credit score. But as youth, we really have to make sure that we're not being tempted by social media to buy things that we cannot afford just because we saw somebody else having it, or just because we are feeling bad and it's emotional buying, right? We have to be mindful to watch how we are spending and make sure that we protect our credit score. Now, this is something that I learned, and again, they don't teach us. When you get on your credit card, at the end of the month, they tell you the minimum balance versus the statement balance, right? If you paying the minimum balance, you're going to end up paying interest, and the interest is crazy. It's like 25%. So it's important, again, that we buy things that we can afford so that by the end of the month, we can pay the full statement balance. So put in that disclaimer there. And then the next one that I want to talk about is investing, right? So there's different ways that we can invest. Some common ones that we hear about are like stocks. So you put your money in stocks, and somehow you have to understand how all that works. Stocks, bonds. I know personally, I used to do an internship, and my coworker every time during lunch break would be checking stocks, and it seemed very pressuring. Like, I cannot imagine myself always checking on the stock market. That seems very stressful. So what are other ways that we can invest and still have a peace of mind? Later on, I learned about this concept of insurance, that insurance can actually protect you. And there are some products where you can have insurance paired with a savings account, and the insurance company, you put in the money there and they deal with the stocks, right? And they make sure that you're getting the best use and growth of your money. So I'm going to be giving an example as we proceed about this concept of indexed universal life insurance here. But overall, it's important that even as youth, again, we take these life skills. They are life skills. We have to be well informed and educated in order to have a successful life financially. Okay, so now some practical skills again for young people. It's important that, and it's interesting because even our parents never got this information. So even though I keep saying young people, again, parents and middle-aged friends and community members here, please feel free. You're included in this as well. It's important that we learn how to manage our money and debt. Debt is like carrying a load on your back. It always feels so heavy. So it's important that we limit that as much as possible. where we can build our credit by paying off our debt as efficiently as possible, starting with the debt that has the highest interest. So if you have unfortunately amassed credit card debt, go ahead and pay it off as soon as possible, because that one is the one that has the largest interest. And then you can come to the next debt that has less and less interest. And it's also important that we keep educating ourselves about those financial products, right? And one of them that, again, I was quite surprised by and that I want to share with you is this life index universal life insurance, and how it can build security both in protecting your life and your health as well as your savings. And I also want to present this as an opportunity for entrepreneurship, right? So um, I have to say that this is one of the easiest way that you can be also called an entrepreneur, because what is an entrepreneur? And what is even a business? A business is you're using what you have to make money, right? You're using the knowledge that you have, the little money that you have to make more, okay? And this allows us to have independence, financial independence. It allows you to be able to solve some problems, like your own financial problems, whether it's paying off that school loan, having money to, again, take some vacations, buy your first home. These are all things that can be possible if we use the little that we have to become big in as short a time as possible. The other one is it's very important to have mentors, right? So, and mentors can be for different things. So you can have a mentor for financial literacy, you can have a mentor for school, you can have a mentor for jobs. So I'm very fortunate to have some great financial professional mentors, and we're going to give you a contact later on if you'd like to approach any. Please feel free to contact us later, and we'll be sure to connect you accordingly. And obviously, having exposure. Again, information is power, and I hope that even as we finish this session tonight, we don't go the way we came. We feel more exposed and we learned and we actually take action. So some solutions, it's important to talk about barriers as well as some solutions. So solutions, again, as young people, you're starting out in life, you don't have much yet. So taking loans and taking some debt is sometimes inevitable. So you can have some microloans. And what is interesting is that this Index Universal Life, you can take a loan from yourself, from your own savings. We're going to talk more about it later. And if you have any more questions, feel free to ask and we can dive deeper. So having some microloans are small loans to help you solve a problem quickly, but not be overburdened by debt. We have some mentorship. Again, there are people here who are very happy to take you under their wing and guide you accordingly. And just some youth hubs. So I can think of this as an opportunity to also connect with like-minded youth and young adults, as well as you know community members, because it's important to understand that as youth we contribute to our communities, and we can be resilient together. Like I mentioned, I'm sure you have all seen where a friend, a community member gets sick, gets an accident, and we immediately do a GoFundMe. We've seen all those. And unfortunately, no matter how big the GoFundMe is, it's going to take care of the immediate expenses, but it's not going to take care of the other things, like any dependence, any debt that you had, any other things that were going on in your own life. So it's important that we find other financial tools that will safeguard us in case of any unexpected rainy day, so that us and our dependents and our own properties don't, be taken away abruptly. And that leads me into this concept of generational wealth. This is almost like foreign. I know, speaking for myself, just being a again, a person of color in the diaspora, our parents, their biggest gift to us was education. That was it. And they did it very happily, and we're very grateful. At the same, and their own parents, that's also what they did for them. So it's important that we change that and we understand that right now I can be setting, like, it's possible for each one of us here to set themselves up where you're not only benefiting yourself and your children, but your children's children, right? It's very possible. That way, even if you're gone, your legacy stays. So it can be some assets that have been passed down from yourself, like a home, a business, an education fund, and some of your investments. So we're going to be specifically diving into the investment, because you can use the investment to pay off any education loans, to fund any business, and to buy a home. Okay. So I mentioned about this one tool. It's just one example. It's not the only one, but it's one that I've learned of in the recent years that I would like to share, because I feel like it does tackle some of the challenges, and it could be a solution. So it's called Index Universal Life Insurance. So before, I used to think life insurance is people get it when they're older, so that when they die, their children get money, right? And it does do that. But there's this other product called indexed universal. It's a type of life insurance where you don't have to die to use it. You can use it. It's like half, and this image shows you, it provides money for protection in case you get sick, like you suddenly get cancer, or you get an accident, or you get a terminal disease or a chronic disease. It's going to give you money to take care of yourself while you're still alive, and your dependents to take care of you, so that you don't become a burden to yourself or your family. And the other part goes into, it's like a savings account that generates you 7 times or more higher than keeping your little savings in a bank, right? So one of the highest rates that a bank savings account will give you is 0.5%. Indexed Universal Life Savings Account will give you around 7%, or even higher. So again, we want to make sure that as youth, the little money that we are working for, we can put it somewhere where it grows the most, right? And also understanding that we are not immune. Just because we are young doesn't mean that our life is like immune. Like I mentioned to you, I know people personally. I have a colleague in school, actually two. One unfortunately had an accident and got paralyzed, leg down, and the other one also, and this was a person who was enrolled in a PhD program. And another one, and he happened to be actually Randis. The other one was an Indian friend of mine who also unfortunately got into an accident, and for her, she got paralyzed neck down. Obviously, they're still alive and they're thriving even amidst those challenges. And they have gone on to get their advanced degrees and work. At the same time, it's important that I know that one friend of mine, her parents had to come, and they're now taking care of her, helping her, because obviously she needs 24/7 care. But if you have a product like this, you have money for even for your family members to use to take care of you. And you're not relying again on those like charity donations through GoFundMe's and the like. And the other thing is, we are always told save, 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 but it's important to save and put it somewhere where it grows the most. So I have been very fortunate to see that even I started as a student, as a grad student in this product, and even just 3 years later, I can see how much the income has grown. Just putting in a little bit of money per month, I can see how much it has grown, way more than it had been in my bank account for years. So it's definitely something that we can give testimonials to. And I just put in an example here to give you a scenario. So if you start young and say you're paying 100 per month, again, starting young is key here, because if you're young, you're able to get a large amount of premium, of coverage for a low premium, right? So for $100 per month, you can get a protection of, say, $500, 500,000 dollars if you're, let's say, 25 years old. But if you're 30, that would go down to, say, 300,000. And that is because the younger you are, generally, you're healthier and you have more time to work. So you're able to give a small monthly payment and get a large package, basically. And the because it's compounding, you pay way less than you gain. Okay. And this is money again that can go into your retirement, that you can use the savings to pay your school debt, to use it to buy your first home, to take a vacation. It's money for yourself, just like your savings. You can use it for anything else that you need. And part of it goes to protect your life again in case you get sick, you get an accident. Unfortunately, dying is a reality. Even though we hate to think about it, that money will go to your family and to any beneficiary that you put in there. So just to wrap up here, we need to really focus on moving from survival to legacy. We are tired of our people just living on the edge, right? Always like feeling like, okay, I need my daily bread. We need to start getting a mindset of planning for the future, investing. It's a reality. It's not only for the top 1%. And this all starts by learning and teaching each other. So um, all can be said and done, but if we don't take action, we leave it there. So again, it's important that we empower ourselves through learning. We are all here learning, which is a great first step. Save and find ways that we can save efficiently. Save where your money is going to grow the most. Build something out of your savings, and also teach others. When you learn something, be sure to teach others, so that together we can rise towards financial freedom and making this whole concept of generational wealth a reality. If you would like to know how you can have a personalized call or like one-on-one free consultation, feel free to contact me at s1user@gmail.com, and I'll forward you to our financial group, which is also right here, ibfinancialfreedom@gmail.com. Thank you so much for your attention and calling. I'll head it back to you. I'm hoping that I covered that in depth, but if there are any other questions, we are happy to address it here.
Wow, thank you so, so much. That was wealth of knowledge you just shared with us today, Dr. Sharon, and very, very grateful. And I learned a lot about some of the issues that are facing young and some older folks as well, just about finance and how to manage our wealth. Some of us are only getting into the wealth that our parents never had. So we got to learn how to manage it and not waste it, and maybe save it so that our kids can have something to build on in their time. So that was really good. I want to turn it off, see with our members here, like the people who are attending, if they have any questions for you. And yeah, anybody in the group, if you have any questions, feel free to post them. Um, and just if you don't have any questions, I want to ask a poll just so that we have an understanding where everybody is at. When did you first learn about how insurance works, credit works? Was it before 18, in college, after you started working, or you're still figuring it out? Please tell us so that we know where everyone is at. And also, I want to know, like, what financial topics do you wish that you had learned earlier between budgeting, investing, building your credit, insurance, life or health or car, anything, and taxes? put it in the chat so that we know where everybody's is, and we can always tailor our future discussion based on what you guys want to know and what you're lacking or knowledge you're lacking. But specifically for today, I want to get questions about the topic for today, which is empowering youth, tackling community financial crises, and building generational wealth, meaning not just the money that you'll use in your lifetime, but your kids and your grandkids can get to enjoy as well. Long-term financial planning.
Yeah, so it looks like Rael asked a really good question, as well as Danma. So
Yes,
Rael asked, how does... Go ahead then.
she says, or he, how does an IUL, Index Universal Life Insurance, cover you if you get into an accident? Yes, Sharon.
And I think that Adana's question is also related. And how long does it take to reap the benefits of having an IUL?
An IUL,
So,
yes.
I actually, so if you have a one-on-one session with us, we can dive deeper into specifically the numbers. But I have actually prepared something to show just as an example, right? And I may share my screen just a little bit to show you. Let me do that quickly. So we'll address Dale's question first. How does IUL protect you? Okay, so like we mentioned, and Dale specifically asked in case of an accident, right? So here, again, I mentioned to you that indexed universal life insurance is unique because you can access your money while you're still alive. It's not just for when you die. And this happens in three different ways. If you get into a situation that is deemed a critical illness, say you get a heart attack, cancer, or stroke, they are going to give you your money. If you got a package of 500,000, you're going to get that if you have a doctor's note. If you get a condition that is deemed a chronic illness, and this means where you cannot perform daily tasks like dressing yourself, eating by yourself, going to the bathroom by yourself. And this tends to happen if a person has an accident, right? I told you about two of my friends that unfortunately got accidents that left them partly paralyzed. So that means that they have a chronic situation where they cannot perform daily tasks themselves. So this is when you present your doctor's note to the life insurance, and then you're able to collect your package because you've been paying into it for a certain amount of time. And it's possible that you can get this product, and then after like 2 months, a person unfortunately gets this accident, you would still get your 500,000 package. Just like a car insurance, right? If you have buy a car today, you get it insured, a month later you get into an accident, they can still, and your car is totaled, they're going to give you, your whole package. That's like this life insurance. It's just great here that, again, you don't have to die for your dependents to collect the money. You can use it for yourself if you have a critical illness, a chronic illness, or a terminal illness. Terminal illness is if you're diagnosed by something that is called a terminal condition. It could be stage 4 cancer, for example. And then Adanma asked, how long does it take for you to reap the benefits? Okay, so this is the example that I want to use, which is a practical example. So this is a real case scenario, and again, we can do this for your specific age and health condition. We are happy to organize a one-on-one with you. So for a 30-year-old with this in the index universal life insurance, say you're paying 200 per month. By age 65, your cash value in this package you can get 300,000 tax-free. Whereas if, say, you were keeping it in the bank, 200 per month, if you multiply times 12, So that's in a year, you get about 2,400 times 35, because that's the remaining years. The total is just 84,000, right? So you get way more because, again, of the compound interest than just keeping it there. Okay, and to answer your question again, I know personally, like I mentioned, I started as a grad student. I was giving a little less than this per month, and I already have I can go in and collect some money that is already in a few thousand. I checked it. Once you get this product, you have a platform where you can see how fast your money is growing. So we are happy to again have a one-on-one and see how much you would want to put in per month and for how long and when you would want to start collecting it out. But ideally, it's recommended that you keep it there for as long as possible because it keeps compounding and compounding than if you take it out too soon. I hope that helped to answer
Yeah,
the question.
that's what I was going to ask, like because yeah, like you said, if your goal is to break the cycle and build generational wealth, then IUL is one of the most powerful and overlooked tools that you can start with. But there's some people who might be on the chat or that are going to see this on YouTube later, and they're like, "Well, I'm young, I'm in my 20s. I don't have any dependents. Why would I need life insurance right now?" Can you tell them what's the real cost of waiting until you have kids?
That is a very good question. So, like I mentioned, some of it's very important, and that is a myth, right? Like, oh, I'm still young. Obviously, I'm not going to get sick, right? Or obviously, I'm not thinking about even those chronic and terminal illnesses right now. But again, health is not guaranteed, and it's way better to protect yourself than waiting until something happens because we all know at least a young person now that has had an unexpected illness or accident, and it's not because they're any older than us. So just again, importances of studying when you're early. First of all, you get a low premium. That means that you get to pay a small amount of money per month for a big package. And the older you become, because you have higher chances of being sick, they ask you to pay a larger premium for the same package as when you had studied a few years ago. The other thing is that you have financial security again. If you have an index universal life, you have part of it that goes to protect you and part of it that is a savings account that can grow, quickly more than keeping your money in a bank. The other thing is that, again, when you're young, you get to lock in insurability, meaning that because you're still healthy, because it's not guaranteed, by the way, that you're going to get these products. They have to first check your health history to make sure that you don't have any like illnesses already that are going to cost them money. And then basically they need to see that you're healthy and you're worth covering for all that time. So obviously the younger that you are, you're more likely to have your high health level, which can change over time the older you become. So it's important if you get to, and the nice thing is that if say you get your package when you're 25, when you're 30, and you're at your peak health, you keep paying the same premium even when you're still 50. But if you get the same package at 50, you pay like 5 times more for the same package. And you can still use your savings again to pay your debts like school loans or get your first home, pay your mortgage. Just generally having a peace of mind for a longer time. So that's how I would respond to that.
Yeah, thank you. So basically, it gives you a peace of mind um, now in real time when you don't really need it as much, and in the future when you do need it the most, you'll be okay. In the moment when you cannot actually go out there and work for your health insurance or work to make that money back. So can you tell us some of the like if somebody was thinking, should I invest in IUL as an investment because it has two, right? It has the insurance part and it has the investment side. It has the
Mm.
life insurance policy and it has the investment side. If somebody is comparing, should I invest in the stock market or should I invest in
Mm.
IUL? What can you tell them? How do you kind of look at them? What's the pros of one as opposed to the other one?
That's a really good question. So I actually also had a hidden slide on that. These are commonly asked questions, and it's important that we address them and we're prepared for them. So, just a couple of things comparing stock market and IUL. So the stock market can rise very significantly and drop very low, right? Depending again on policies. So we know the current political climate we're in is pretty like it's changing so quickly, and that can
Volatile.
affect the stock market. Exactly. So one time if the policies seem okay, the stock of this same company can be at 20%. And then if the president says something, it can drop to negative 15%. So
Crazy.
obviously, if you've invested in that stock, your money is also fluctuating. The difference with Index Universal Life, it has a cap and a minimum. So you're guaranteed that you're not never going to lose to below below zero. So it's called a flow rate of 0%. Your money can only grow, right? It can only be zero and up, even though the company, the insurance company did use your money to invest in these stocks. They take that loss on themselves. That loss isn't transferred on the client. And where they benefit from is if that same stock goes to 20%, for you, they give you up to say 10%. Okay. So at least you're guaranteed that your money is never going to drop. It's only going to increase with time, right? And so basically, the insurance company takes the bullet for you. They are your cushion for going down, and they also benefit a bit if the stock does extraordinarily because you're capped at a certain percentage, which I know personally gives me a peace of mind because again, I'm not one to keep always checking on the stocks every couple of hours a day. I just want to put it in something that I know is going to keep growing over time. That way, the little savings that I put in, I know they have the highest capability of growing steadily, you know?
All right. Yeah, so definitely. I think that's a good thing to point out that one is uh, risk managed growth, that is the IUL, whereas investing in the stock market, you're taking on the risks of market volatility and the downside protection. There's no downside protection. Whereas with IUL, with the risk managed growth, there's a flow rate where your money will not go below the capital that was put in there. So the worst that can happen is that your money doesn't grow. It stays at zero. Whereas on the market, like you said, if it goes below zero and you're losing the capital that you put in, there's nothing you can do. You already put your money there. Um, so that's a good thing to point out. And do you know of any wrong reasons to get an IUL? Like, are there wrong reasons that people sometimes get an IUL that you can think of?
That's another good question. So the Index Universal Life, the only downside I can think about is if a person comes in and say they want a very huge package that they are not able to sustain. Say a person comes in and wants $1 million package, but they're in between jobs and they signed up to be giving like $300 a month, right? So you want to come in and get a reasonable package that you can sustain for a certain amount of time. And this is why we are saying, please feel free to contact us so that we can go through a one-on-one session with you, discuss what is comfortable for you, that you can maintain over a steady amount of time. Because again, the benefit here is compound interest. You want to keep it in there for a long amount of time. That way it can benefit you. But other than that, I think that more people need to know about these great tools so that we can start gaining from them sooner than later. Because again,
I, th-
information is power.
That's great. That's awesome because I think you just touched on what was going on in my mind. Those two things, number one is that this is a long-term investment thing. You don't want to, it's not a get rich soon scam. You don't think that you can, start an IUL and then next month you can withdraw everything and you've made $1 million. This is something
Yeah.
that you have to put in there 10 plus years. This is something that your kids can inherit. Obviously, you get the living benefits, and maybe you can speak a little bit on that if you have had planned. But the living benefits do not really touch, the core of your portfolio is a legacy portfolio that you can pass down to your descendants, and then they can just kind of capitalize on the living benefits that you can get when you get ill or when you really need the money. But it's not a get rich scheme, so it's a long-term investment. And the other thing is that it's only for the wealthy. You talked about that earlier. It's not about only the people in the top 1% can have an IUL. Like you said, you can sit down, especially when you're still young, you don't have any medical conditions. You can sit down, and even with a small, you said you started as a grad student,
Mhm.
$100 per month. So it's very affordable to anybody at any level. And if you're early, young, healthy, you can lock in cheap premiums. That way, your premiums are locked in at $100. Even when you're in your 50s and you have, I don't know, cancer, like really bad terminal illness, but actually terminal illness doesn't matter. But maybe you have back problems or you had surgery, because these are things that can affect your premium. But if you locked it in before you had these conditions, then you're good. So
Mhm.
um, it's definitely open to anybody at any income level, and it's a long-term investment opportunity. Don't get it wrong. It's not a get rich quick scheme. So any other questions? Let me read the chat here. Yeah, I don't see a lot of questions, but I'll open it up. If anybody wants to open up their mic as well, maybe they want to type, you can unmute and ask questions, make a comment, concerns, addition, you're more than welcome. And Mrs. Immaculate, yeah, there we go. Come on, it's okay. You can put your
Thank
video
you
too.
so much, Dr. Shawn, for that critical information for sure. We needed to hear that, mostly from a young person. It's always good to be prepared than being sorry. So all this that you're telling us, most young people or the youth that we're calling it today, they tend to feel like you said again, this is not for me. I have no children. I have no home. Why do I have to start early? But you beautifully put it, and there is nothing much I can add other than saying thank you. But I wanted to add something about for the question asked by Adama about how long does it take to reap the benefits of investment. Really, so with IUL, you can actually, there is what they call put like jump starting your IUL. So everybody actually takes this great product according to their needs, to their financial needs. That is why, like Dr. Shawn was saying, it is better for you to sit with a professional actually to tailor your investment or your account according to your financial need. We have what we call like needs analysis. We sit with a client. We actually analyze exactly what they need, because some people, like Dr. Shawn was showing us, the two parts of an IUL, whereby there is an investment part which is accumulation, and then the protection. If someone comes in just really who are focused on investing more, we actually tailor that to investing more. If someone wants a balanced IUL that has a balanced protection and accumulation, it will be tailored to that particular need. And some people will really be like, hey, I'm young, like actually the youth, they always go with a more, the one that is focused on more saving, and you can actually jumpstart it. So let's say you have some money sitting somewhere in a bank whereby they are earning you 0.01. You're like, hey, this is my money that I in my savings account. I don't want to touch it. I don't want to use it. And it's not earning anything. You could say, possibly you have 5,000 sitting in there. If you put it in your IUL as you start your account, that money is going to start right away earning the compounding interest. So it's not even part of your life insurance, it's part of your accumulation. So that is how good. So someone who started off actually with jump starting their IUL, they'll be able to start reaping, like Adama is saying. You can start as early as just any time, because you start with your money in already, and that money is already compounding interest. Remember, with the compounding interest, like Sharon was saying, you earn interest on top of interest. It's not just what you earn today. Even what you earn this year is going to be earning interest as well. It is that beautiful. So yes, as Dr. Sharon was saying, we are here to actually lend a hand. These actually consultations are free. We don't charge for that. These trainings, Thursday trainings, the financial literacy trainings, they are here for 1 hour. So it is not easy to go deep explaining what every person will need, because again, we have different financial needs, but we are here to sit with you personally and go through everything you need so that we can give you the best that you need to get from your portfolio. Thank you again. Dr. Sharon and Collins, thank you.
Thank you so much. So like we mentioned, Ms. Mekidet is our star financial professional in the audience. So we're going to put contact information here in the chat for you to contact us for a free consultation. So please go ahead and take advantage of that so that we can share what we've learned so that we all grow together.
Oh, last question. I don't know if you want to address this. I know we talked about IUL and all these investment vehicles being for all ages, but what can you say to Tamugabo Rupia, who asks, are 50-year-olds, can they start with IUL and gain something?
Yes, that's a very good question. Again, we all can't control when we get to learn about something great, right? The best time was yesterday, the next best time is today, right? If yesterday we didn't have this information, now we have this information, we have to do something about it. Yes, a person starting at 50 may pay a higher premium than a person who is 25 or 30, but it's better than waiting until you're 60 or 70, right? So I would say go ahead and again have a one-on-one, and so that we see it's definitely possible. What we would need to just see is the exact numbers of what you would be putting in and how much you would be getting out.
That's the good thing, and you mentioned it at the beginning of your presentation, that the thing that young people don't have that older people have is capital, right?
Mhm.
So although you'll be paying more if you're 50 to get the same amount of policy, you say $1 million policy, at 50, you'll be paying more premium to catch up. Whereas a younger person at 20 will be paying much less premium for the same policy. But the person at 20 does not have a job that is, stable, that pays well, or have savings, whereas somebody who's 50 probably has a good income, has some savings, and they can afford to pay those high premiums. But like you said, it's a model that you can put in your age, put in how much you want to have based on your expenses, what your family needs, and then they'll do a calculation for you and find what best fits for you. So reach out, hit up that email, and then you can have a one-on-one meeting and do an illustration for your case.
Mhm. Mhm. Yeah. Thank you, everyone, for your attention and participation. It's been a nice, lively crowd. Again, I want to thank all the people that honored our invitation. Thank you. I hope you learned something, and go and share it and come back. Come back Thursday. Contact us for any other follow-up questions or illustrations.
Yes, absolutely. Let's keep the momentum going. Financial change starts with each one of us, and it starts today. The best time to do it was yesterday. The next best time is today. So make sure you don't let this just end here. Make sure that you take a step, act before you wake up tomorrow and you've wasted that time. Thank you again. So we'll now end the live session. You'll be able to find it on different platforms. And we'll put the link in the chat for the recorded version that you can share with your friends or revisit at a later time. Thank you again for our guests and for our host. Have a lovely rest of your evening.